if you're comfortable in the stock market, then, I'm not going to tell you not to do what you're comfortable doing. I personally, when you're looking at a mining stock, that's not a piece of gold. It has debt attached to it. It has lots of things that are attached to it, but it's not the same as having a physical piece of metal.
If I own gold now and it's revalued to, say, on the low end, $10,000 an ounce.
Okay.
A, how do they do that? How does it fit? How does silver fit in during the gold revaluation? And do they revalue silver as well, or does it just rise in value on its own?
Okay. So when they do an overnight revaluation and you see gold go to 10,000 an ounce, what actually happens is up to that point, it's been absolutely artificially suppressed. But what they'll do with the currency is they will lop off zeros and reset the currency, and then gold, actually as gold rises, once they do the reset, okay, let me back up. Let me just kind of see this in my mind for a second. Okay, what actually happens is that they start not suppressing the price of gold. In the black market, it's usually running anyway, much higher than the official rates. Kind of, even though it's not a black market, but kind of there's going to be a differential between spot at certain times. When it's more stressed, there'll be a differential between spot and then how much we have to pay for the physical, which is a true supply-demand department. So what actually happens is they will stop suppressing the price of gold. When they do the overnight revaluation, then they lop off zeros and everything reflects that new lopping off, but not until the gold price is really kind of released. And I think I'm saying this in a convoluted way. I'll show you how the silver fits in. They don't revalue silver. They do just revalue gold, but silver is the secondary currency metal. And so it flows up with gold until typically it hits a certain point. And then because gold is the primary currency metal, gold will continue to express to higher levels until it is probably overshooting its fundamental value. But its true fundamental value is based on the amount of paper that they continue to print.
I noticed what appeared to be a gap between the start of hyperinflation and the significant rise in the price of 1 ounce of gold, about 5 to 9 years. What is your advice for holding on to a mortgaged residence if the mortgage is repriced a year or so after the start of hyperinflation? It doesn't appear as though gold and silver will increase quickly enough to allow you to pay off your mortgage before a restructure.
Yeah, actually, when they restructure your mortgage, that's during that whole period of time when everything is getting restructured. So they can't really restructure your mortgage. Well, they can do anything they want, I suppose, so I shouldn't say it like that. But mortgages don't typically get restructured until they restructure the currency. So you do have that time. And the reason why you're looking at the official price of gold and you're seeing that lagging, even as hyperinflation is beginning to kick in, I'm not really sure that that's accurate, that hyperinflation kicks in and then you see gold suppressed for another 5 to 9 years.
Well, it might have been.
I'll go back and look at that
It's
graph.
part 2, so because I think you did 6 countries, right?
I did.
So it could have been
6 countries.
One country that he's looking at.
Maybe. I'll go back and look at that because honestly, as the hyperinflation kicks in, everything hyperinflates and gold doesn't, in my mind, I don't see gold lagging 5 to 9 years.
How long did it happen, if you can remember, with Venezuela, right? Because Venezuela, they artificially suppress the price of gold for a little while. Exactly,
that's where I was going. Well, they'll do it as long as they can. But in the black market, then the price was actually soaring, even as it was being suppressed. And it's kind of like holding your hand on the spring. When you remove your hand, then it's going to shoot. In hyperinflation's case, it's going to shoot up. But I do not see.
So you're saying there's a government official price.
Correct.
And then there's a period of time where the physical price is the physical price of gold, not the actual spot market price of gold, right? Which is being suppressed. the physical market price is going up.
Correct.
Right? In with dealers like us or even private individuals.
Well, right.
Because the demand.
Because of the demand. Well, and also because of the loss of value in the currency as well. So it's a double whammy.
But meanwhile, they're keeping the price suppressed here until it explodes.
Until they're ready to get ready for that reset.
Level.
Yep, exactly.
Okay.
Because they don't want you to... a rising gold price is an indication of a failing currency. So they're going to keep that suppressed as long as they're able to do so. But you see, this is the piece that I think is hard for a lot of people to get. And that is that at some point, the government needs the price of gold to go to somewhere near its fundamental value so that they can reset and restructure the currency. So it isn't Wall Street making that determination. Ultimately, it's the central banks and the governments that are going to make that determination. But they're going to definitely keep it suppressed as long as they can so that you don't realize what's happening. I mean, even today, more and more people are waking up as we're watching the inflation, which is now no longer transitory. Who didn't know that? But do we still have? And I mean, I'm not complaining because there are a lot of people that are noticing this that are taking action. But would you say that the majority of the people realize what's really happening with the currency? Because it's not the prices going up, it's the currency going down.
There's definitely more people that are becoming aware than I think ever before. But
definitely.
Did I say the majority? No.
No, exactly. And so you have to understand that too, at some point in here, this is why they don't want inflation to get entrenched. In other words, when they look at inflation expectations, they want you to not expect inflation to be high going out, 2 years, 3 years, 5 years, because then you won't change, the theory is anyway, that you won't change your buying patterns. Mm-hmm. And they want to be able to predict it. They want to be able to control that. So, but now they're coming globally. There are a number of central banks, including in the US, that is really kind of seeing that inflation in the public mind is really starting to get entrenched. And the rise of unions, which is what I'm going to talk about tomorrow, unions are having a day. And for many, many years, they've been going downhill. Private unions have been going downhill. Now that's shifting. There are a number of reasons for that to shift. I want to talk about that more. But part of it is that people see how much money the billionaires have made. They've made a lot of money during COVID or during this period of time. And then the regular workers, those essential workers. So there's a big shift that's happening right now. And that too will have a function of inflation and whether or not it remains entrenched in a wage price spike.
With the increase in gold and silver prices we all anticipate, why wouldn't it make sense to buy mining stocks as well as physical metals themselves? It would seem that just about any mining company would survive or even be bought out by larger mining companies, as the middle would be extremely valuable.
Well, everybody's got to do what they're comfortable doing. But I don't want anybody to think that a piece of paper or a certificate is the same thing as having physical gold in your hand. So, if you're comfortable in the stock market, then, I'm not going to tell you not to do what you're comfortable doing. I personally, when you're looking at a mining stock, that's not a piece of gold. It has debt attached to it. It has lots of things that are attached to it, but it's not the same as having a physical piece of metal. And this is a currency life cycle. And when you go to liquidate that stock, what are you going to convert it into? You're going to convert it into fiat, into the dollars or wherever you are in the world, into the local fiat. That's what I'm trying to avoid. So, I'm not saying it won't go up, and you can certainly do that. You just want to make sure that your bet is hedged, and that is not really your gold position. That's more of, in my opinion, that's more of a stock position. and you'd have to do all your research on the company and look at the debt and look at the management and look at the cash flow and look at all of these things. So it's very different than owning up an ounce of gold.